Hello, this is Sky Moore to teach net profits from as relevant for contractual obligations to third parties. Where does this come up? Anytime you owe net profits to talent, writers, directors, actors on a film, that's going to be defined by contract. When you owe money to overages on a license, all right, that's the share of contractual net profits. Residuals to the guilds, or if someone's purchased a contractual share of profit. So anytime you're going to look at the contract for purposes of calculating net profits, these are the rules I want to discuss in this segment. And this is all going to be an issue of what does the contract say. And I think the best way to teach this segment is to show what issues that can come up that will defeat people's expectations, or that you could another view it as kind of games people play in the film industry to look out for. So let's start with gross receipts. You would think that if someone's entitled to a share of gross receipts that it doesn't get better than that, and how could there be any issues or problems? There's a lot of issues and problems with gross receipts. Let's start in no particular order with withholding taxes. And this is when foreign distributors are permitted to deduct a withholding tax under local law. For example, they may owe $100, but they may have the right to withhold 10%, so they withhold 10 and remit 90. And what you will see is that the film company that gets the payment of 90 is entitled to a credit on its own tax return against U.S. taxes for the $10. So it effectively gets the $10 back through a reduction of its own tax liability. And in those cases, you should make sure that the $10 is added to gross receipts, that they're not just reporting to you by deducting the 10 because they're getting a benefit on their tax return. Next thing to look out for on gross receipts is whose gross receipts. The film company often has affiliates that are entitled to receive theatrical directly or video or TV, and they in turn remit to the parent company. Whose gross receipts are you getting? Are you getting the gross receipts of the parent company, or are you getting the gross receipts of these affiliates? And you want to make sure, if you're the third party, that you're getting the gross receipts of the affiliates. Otherwise, it's too easy to strip off revenue through using affiliates. Another common, just not a game, but just custom and practice, is whenever you use the word video gross receipts, the industry practice is to pick up only 20%. That's just custom and practice in the industry. So, and if you don't say anything else, that's the way it will work. And so if you intend something else, you've got to say it in the contract. For example, video will be included at 100% minus actual costs. Another big issue is allocations, and this is a very common problem, where a film company will sell a package of films to a foreign distributor or to a TV buyer, and they will receive a lump sum payment for all of those films. And some are great films and some are dog films. And I once had a situation where I was buying 5 films from a studio for $50 million on behalf of a client. And lo and behold, on the day before the purchase, the studio showed up with another 95 films that they gave to us for free. What the studio was doing was taking our $50 million and allocating it, instead of to the 5 big new films, they allocated it over 100 films in total. So it ended up, instead of $10 million a film, being about $500,000 per film. And it drastically reduced the participations that were owed to talent on those 5 big films. This is an allocation problem, and it's very difficult to overcome, but you should be aware of it. You can sometimes argue that it should be tied to the box office results of the films as opposed to just being made pro rata. Another issue to look out for on gross receipts is that the studio may get a big payment up front from a TV company in exchange for giving TV rights in the future, and when do they report it? Often they don't report the cash until the TV license period starts, and even then they may report it over the term of the license. So you want to put the film company to report the gross receipts on the cash method when they get the cash. Another thing to look out for is reserves. You may see a film company pick up $100 in gross receipts from video, but they're going to deduct a huge reserve against it because of potential refunds. So you should cap the amount of the reserves, and you should require them to be liquidated within a particular period of time. Commonly, it would be 20% for video, and even that's generous these days, and at least liquidated within 6 months. That would be common compromise to resolve. So all of those are common games with gross receipts, even for a pure gross profit participant. Next thing to look out for are distribution expenses, because in most cases, the film company is entitled to deduct distribution expenses. One issue is to look out for payments to affiliates. Often, film companies pay their affiliates for various services, and they can totally overcharge for those services. So look out for payments for creating key art, or for publicity, or for any kind of other service that in theory could be rendered by a third party. And the contract should deal with that by limiting expenses that can be deducted that are paid to affiliates, or capping them. Another big issue is overhead. Do film companies deduct the cost of their own employees? Do they deduct unrelated costs against your film? What does the contract say? You should be looking out for those issues. They always get to deduct residuals paid to the guild, so you should expect that showing up on your distribution statement. There often are certain categories of expenses that you would think of as that wouldn't be deducted, but that are always deducted. MPAA trade dues, which in truth is overhead, but they always allocate part of that to your film and deduct it. Checking costs, where they're checking reporting by the theaters. Collection costs. There's all these expenses that often will show up on your distribution statement. Another issue to look out for is rebates. Often film companies may pay a lab, say $100, and they'll deduct that, but oh, by the way, the lab is rebating $20 back to the studio. And the question is that $20 netting out, you would think that the net expense would be $80 in that case, but often the studios or the film companies will deduct $100 and won't show that rebate. This is a contractual question that you should be aware of and that you should be asking for. Another issue is future expenses. Just like the reporting income on the cash method, you should be asking for distribution expenses to be reported on the cash method so that they aren't deducting future expenses that they haven't yet incurred or that hasn't been accrued. Most statements will start with gross, minus distribution expenses, and then finally production costs. Production costs, all the same games that come in under distribution expenses apply to production costs. That is, payments to affiliates, allocation of overhead. There's usually a just in-your-face additional charge. Often it's 15% of the cost of the film that's just deducted as a gimme. That's a negotiable item. And then the last key thing is interest. Production costs usually have an interest component that the film company can deduct in addition to production costs, and they like to include participations under production costs so that they get interest on those as well. And this is a negotiable issue. You should go back and maybe ask for no interest to be charged, for example, on participations, or lower the rate of interest that's being charged. And often production costs are recouped last, which means that interest runs forever, and this is a negotiable issue. That is, their distribution costs are deducted first, and then production costs, you might reverse the order to accelerate the repayment of production costs to lower the amount of interest. The last thing that comes up with on these calculations is the distribution fee. And the distribution fee is just an off-the-top charge that the film company retains. It is usually stated as a percentage of gross receipts. It can range all the way from 10% up to as high as 40%, depending on the economics and what's been negotiated as part of the deal, whether the film company is paying an advance or not. One issue to look out for if you are paying a distribution fee, or if the studio is entitled to it, or the film company, is are they doing the work, or are they just laying off the rights to a third party? Are you being double charged a distribution fee by a third party? And so what you should be saying is, if you, film company, are not distributing at source, then you should lower your distribution fee to at most maybe 10% as an override on top of whatever the sub-distributor is charging, so that you don't find yourself being charged effectively twice for the same work. this is a contractual issue. You get to negotiate it. Be aware of the issues that come up, and you can contract around them if you're careful about it. But you've just got to go through gross receipts, distribution expenses, production costs, and the distribution fee. Think through the issues that apply to each one. Deal with them in your contract, and that will give you the best protection that you can. Your ultimate way to enforce this is your right to audit. And you've got to be careful on your contract there. The film companies these days, the studios are often saying, oh, even though you have the right to audit, sorry, the line is too long, come back in 2 years and we'll let you audit then. And you go, what do we do? So maybe you build in liquidated damages into your contract or some kind of penalty if they don't let you audit. And then if you do get to audit, the film company might have the right to approve your auditor, so maybe you get them approved in advance. Sometimes they don't let the auditor make copies of the records, so in your contract you can deal with that and make sure that you've got the right to make copies. What records do you have the right to look at? That's an important issue. For example, the general ledger of the film company you really kind of need that to know whether allocation games are going on. And then what do you do if you find a discrepancy? Do you get to litigate? Are you subject to arbitration? Your contract should spell out what your contractual remedies are if you're owed money. And again, this is up to you to protect yourself in the contract in advance. This is Sky Moore signing off on this segment. Hope you tune into the next one.